But I want to switch back to tech because we just got the results out from a big tech giant. Microsoft is out with its quarterly earnings. Jared Blickery has the numbers for us. Jared.
Yeah, big beats across the board in most segments, but seeing the stock down about 2% right now. So I'll just go through some of the numbers. Revenue was a beat, 38 billion or 38.0 billion. Estimate was for 36.4 billion. And then on EPS, that was a nice beat too by 12 cents, coming in at $1.46 when estimates were for $1.36. And then digging into the revenue numbers a little bit deeper, we got personal computing, nice beat, coming in at 12.9 billion when the estimate was for 11.5 billion. Nice to see that, and it's probably a COVID play too, as a lot of people had to buy more equipment to service their needs working from home. Now, intelligent cloud is a big item on their list here that analysts are looking at. That came in at 13.4 billion. Estimate was for 13.1 billion. And then finally, I'm looking for some other breakouts here. Not seeing much to be able to compare, but really overall, I think the only miss that I'm seeing here is in productivity. That was coming in at 11.8 billion. The estimate was for 11.9 billion. Just again, looking at the stock, it's down 2.5% now and after hours trading. And if we take a look at the last 3 months, we can see it has been a juggernaut, up 22%. And year-to-date number, it is up 34%, Shauna.
Yeah, Jared, I mean, these are pretty strong numbers. So it's interesting to see the stock off just around 2.5%, but we do have to remember the fact that shares have climbed over 30% so far this year. But Andy, I'd love to get your thoughts. I'm reading through the earnings release right now, and Satya Nadella here, the CEO of Microsoft, saying some interesting comments, talking about the last 5 months have made it clear that tech intensity is the key to business resilience at this point. Went on to say that organizations that build their own digital capability will recover faster and emerge from this crisis stronger. So just speaking of the fact that maybe this rally in the technology needs, it's been a reason why they have been a favorite here amongst investors, and they will continue to lead us here in the second half of the year.
See, you know what, Sean? It's very interesting to me because I don't think you'd be hearing that chest beating from Tim Cook or Jeff Bezos or Zuck or Sundar Pichai this week. But guess who's left out of testifying in Washington? Oh, Satya Nadella. I mean, that's why I'm making light of this a little bit. Of course, Satya Nadella actually is in a really good place because his company is so successful. I mean, hearing what Jared was just saying about the performance and what I was just saying about the market cap and these numbers, I don't care if they're a little bit soft or what. They're probably not going to be, but they're not. But, I mean, this company is firing on all cylinders, and yet it's not in the crosshairs of the regulators. Now, of course, it was back in the days of Wintel and Windows, when it had basically the whole soup to nuts of the PC business wrapped up. But that went away. And what's a PC? And so it's able to achieve this incredible performance without being perceived as monopolistic, Shauna, which is something in the tech world. It's actually unique in the tech world right now.
Yeah, and just going back a little bit on what Jared was talking about, the stock down about 2% after hours. He mentioned the light numbers on the productivity side. Also some commentary here from the company, I think giving investors some caution more broadly. The company's saying, within that productivity suite, continued slow and small and medium-sized businesses hurt some of that. LinkedIn, yesterday they announced the job cuts. Microsoft saying it was negatively impacted by a weak job market and reductions in ad spend. Also noting that its search business, Microsoft, of course, does operate a large search business, was negatively impacted by a reduction in advertising spend. So I think just a couple of maybe downbeat comments on the macro setup, at least as far as Microsoft sees things here.
Yeah, Miles, it's interesting because it also goes off of similar comments that we heard last quarter from Microsoft, because at the end of the previous quarter, they also noted the fact that they did see slowing transactional licensing, specifically from the same size businesses, small and medium-sized businesses. And then, of course, they were starting to see that reduction in advertising spend on LinkedIn that, I guess, continued through its most recent quarter. So that's interesting here. Probably is one of the big reasons why the stock is under a bit of pressure here, off just around 2% in after hours.